Welcome back, everybody, to VVP Trading. If you're new to this channel, make sure to hit the subscribe button and also the bell icon to be notified of any video that I post. So in today's video, we're basically going to go over 5 things that you should always be paying attention to before placing any trade in the Forex market. These are very basic and simple steps that will take you a couple minutes, but you have to make sure that you are looking out for these things every time before you place a trade so that you become more profitable and so that you're not losing money in the market. All right, so let's get right into it. So the very first thing you should be looking at is your risk to reward. So as I stated in previous videos that I have uploaded, ideal risk to reward is a 1 to 3. Also, as I said before, some people trade a 1 to 1, but if you look right here, having a 1 to 3 allows you to become profitable even if you have a 30% success rate, which is key, because you don't want to, if you lose 5 trades out of 10, you're break even here. If you only win 3 out of 7, you're still actually profitable. So risk to reward is very key. And also do not trade in no man's land. Here, I will show you an example. 1 second. Of why we do not want to be trading in no man's land. So this is very important. Let's look at this trade, for example, that I had taken earlier this week, actually yesterday. So I got in right here at this zone, this rectangle. If I had taken the trade up here, we're scrolling, look at what that puts my risk to reward, 0.92. But if I had traded where I had my buy-in before, I believe it was like right here. I believe it was right here. I had a very tight, this is 12 pip stop loss. It was like a quick scalp, but it didn't turn out to really play out in like, half an hour or an hour. I mean, I'm still in profit. So I actually put my stop loss at break even. So this is a risk-free trade. But as stated before, so if you're trading in no man's land, let's say up here, for instance, you put your risk to reward very small, and this is smaller than a 1 to 1. So what that means is you cannot use a high lot size. Your lot size gets reduced by a huge factor. So instead, what you want to be doing is trading key zones. So right here, I have it marked. I have a rectangle. This is my key zone that I identified. I put my buy limit at key zone, and right here I have a 6 to 3 risk to reward. So I risk 1%. I believe I risked 1.5% on this trade. So 1.5, I'm looking at about 10% return on the account for this one trade. So risk to reward, very important. Let me get into this. Risk to reward, very important. Make sure to not trade in no man's land, as I just showed with that example, because then your risk to reward becomes a lot smaller and you won't have your ideal 1 to 3, and then you won't be really taking any trades, or if you do take trades, they're not going to be very successful or profitable trades. You're going to be maybe gaining, in this case, not even a percent, you know what I mean? So it's very important to not trade in no man's land. So our second thing to look for is risk management. I also uploaded a video about this before. So risk 0.5% to 1.5% on each trade. 1.5% on each trade is a lot, because let's say you have 3 take profits. So if you are trading 3 different, if you open 3 different trades for 1.5%, that is 4.5%. And that is a lot risking on one pair. So 1.5% if you are just opening one trade. So it all depends on how many take profits you have and how many trades you're opening for each pair. That's why I risked 1.5%, because I only opened one trade, so that's okay. But if you're opening multiple trades, make sure that the total you are the total that you are risking is around this percentage. So right here, Also, second on this slide right here, risk to reward is irrelevant if risk management is not used. Because let's say that you don't use the risk calculator and you don't know how much you're risking, and it turns out if it hits stop loss, you risk, let's say, 10% of your account. So the risk to reward and the percentages for a success rate kind of gets thrown out the window because you did not practice risk management. So it is very important. Make sure that you practice risk management, that you're risking 0.5 to 1.5% on each trade. You know, it's very important not to become selfish and kind of greedy and try to, maximize as much, gain as you can. I mean, it is very good to maximize as much gain as you can. Let's say if you have a risk to reward that can become, let's say a 1 to 8, a 1 to 9, that you can hold your trade and let it hit a 1 to 8, 1 to 9, but don't make your stop loss so much smaller just so that your risk to reward is greater. Make sure just use risk management and make sure you use it all the time. And also this last part, I did not mention it in the other video, but make sure you are using your account balance, not your equity, because let's say at the moment you are positive $500 on all your trades and you use your equity. So your equity is actually inaccurate. You should be using your account balance, how much you have in that account right now. So that is how much you are risking, because risking 1.5% on your equity, that's basically your account and your trades going at the same time added up. So make sure you're using your account balance and not your equity. That is very important, because 1.5% of your equity could turn out to be, let's say, 2.5% of your account balance, and we don't want that. So another thing to look at is news. News is very important, especially with forex, because it's foreign exchange. Let's say there's any news coming out about US and unemployment or anything like that, you want to be aware of that and know what news are coming out, if it's high impact, medium impact, or if it's just no impact news, and you don't have to worry about that. We do not want to trade high impact or even medium impact. We want to stay away from those pairs because we don't know how the market is going to react to it. I mean, there are some cases where it's kind of basically known whether it's going to impact it in a bad way or it's going to impact it in a good way. So high impact does not necessarily mean, oh, it's very bad news, because you'll see on the website that I show you in a second, it's going to be a red folder. That does not mean that it's bad news and that, let's say, US in this example is going to tank. That's not what it means. It just means that it's high impact and it can go up or it can go down, but it's just going to be very volatile and it can happen very fast. So we don't want to trade that. But either way, if you're risking your 1% or 1 to 5%, that doesn't really matter as long as you have a firm stop loss placed. It doesn't matter, but it's better to not trade that and be kicked out of 6 trades and lose 6% or 9% because there's high impact news. So it's better to just stay away from high impact news. Right here, I'll show you. Right here, I will put it in the description, or I'll even put a link in the video. So right here we have, it's called forexfactory.com. So right here we go on calendar, and right here we have all pairs. We have AUD, NZD, Euro, GBP, CAD, USD, JPY. Right here, AUD, JPY. So if you go right here, I already filtered it. So if you go filter, you can actually edit what you want. So we don't really want to see the no impact news. This right here will show you low impact. We don't really want to see that. All we want to see is so right here, so it says medium impact, and we have right here high impact. So now we filter, apply filter. So all we want to see is these. And as I mentioned before, just because there is a red, this kind of looks like a folder-ish, just because there's this red icon does not mean that that pair is going to tank. It just means that it's predicted to be highly impacted. It's predicted to highly impact the pair. So right here you can see everything. It has the date right here, has everything. So right now we are September 9th. We look right here, Thursday, September 9th. So we had some Euro news and USD and also CAD news. So this is something you should always be looking at. Make sure there's nothing high impact, a trade that you're going to be looking into, be looking to trade, a trade that you're analyzing. Just beware of this. Beware of any high impact news. All right, let's get back into it. Okay, so we went over news. So right here, reasonable stop loss. As I mentioned in the previous video, and actually a little bit earlier in this video, you want to set a reasonable stop loss. You don't want your stop loss to just hit your criteria of 10, 15 pips, because in some cases, previous structure is 25, 30 pips. So if you put stop loss at 15 pips, it can come down, retest previous structure, and then go your way. But because you have stop loss of 15 pips, you are kicked out of the trade. You lose your 1.5%, and then the market goes the way you expected, and you not only lose your 1.5%, you also lose a potential gain, which is something that we don't want to see. So right here on the second bullet, do not make every stop loss X amount of pips. So that will just result in you being stopped out of more trades, unless right here states very clearly, unless you are a very experienced scalp trader. So if you're a scalper, they trade very low time frame, and their stop loss can be somewhere between like 5 to like 8 pips, 10 pips. So that is very different. If you are going to be swing trading or even day trading, you don't want your stop loss to be very, very tight. You don't want your stop loss like 15, 20 pips. I mean, unless that is what structure of that pair gives you, then use that. But you don't want to just hit a criteria and hit that 15 to 20, mark for your pips for stop loss, and then you just get stopped out, and then you're losing 1.5%. So this one, so currency alignment. I know it sounds kind of funky, but you want to make sure that you are not trading against yourself, and that your trades aren't trading against themselves either. So right here, I put an example. So example, if you're buying USD CAD, that means you are stating that USD is stronger than CAD. It doesn't necessarily mean that CAD is weak or USD is strong. It just means that one is stronger than the other. But then again, let's say you are buying at the same time, you're buying CAD, SEF. So that means you're saying CAD is stronger than SEF. But then you're also selling USD CAD, which doesn't make any sense, because you said that USD is stronger than CAD, but then CAD is stronger than SEF, but then you're selling USD SEF. You're saying that SEF is very weak and that USD is stronger, but you're selling USD SEF for some reason. So that is something to look out for. You don't want to be trading against yourself. You don't want to be trading against the pairs. So to recap this video, the 5 things we want to be looking at and making sure we pay attention to before placing a trade in the forex market is risk management. Basically what our return is for our risk. We want to make sure that, I mean, for me, ideally above 1 to 3. Also risk management, make sure you are not risking above maximum 1.5% total for the trade. So if you're taking 3 trades, as I stated before, do 0.5% for each one. Also news. News play a big factor in the forex market. If there are some news coming out that can hurt the US dollar, you want to know about that and kind of pay attention to it and make sure you're not stuck on the wrong end of it. And then if you are not applying proper risk management, then you are losing 5 to 10%. Some risk management, news, risk to reward, very important. Also want to make sure you have a reasonable stop loss. As I stated, don't try to hit that criteria 15, 20 pips. Just take what market is giving you, whatever structure that was previous. You want to make sure that you are setting a reasonable stop loss and not, shooting for the stars. And I have a 5 pip stop loss. I can trade 5 times higher, 5 times greater lot size. No, you want to, be reasonable, be realistic, and also make sure you're not trading against yourself, and make sure that your trades aren't going against one another. So that's a recap for the video. If you like the video, make sure to hit the thumbs up button. Also subscribe, hit the bell icon. to be notified of more videos that I upload. If you have any questions, make sure to ask them in the comment section below, or if you go my the about page of this channel, there is an email and you can ask me any questions, or if you have any video recommendations, I'll be more than happy to upload any videos.